Yeah. So last time what we have discussed, we started one chapter accounts for limited company, and we have learned the meaning of shares, right? Why
Yeah.
company issue shares?
So that multiple people can invest small amounts instead of limited people having to invest large amounts.
Yes. Because a limited company require huge funds, isn't it?
Yeah.
So
Yeah.
it is very risky for one or few people to invest the entire amount.
Yeah.
So how company will arrange the funds from the market by issuing shares? So when company will issue shares, each share will be probably of $10 or $100, right?
Yeah.
So it
It
is,
won't be as expensive.
yeah,
Yeah.
it is easy for common people to invest. So
Yeah.
shares is actually a source of finance for the limited companies. They can
Yeah.
issue shares and raise finance from the market. And then we have discussed type of shares. There are two types of shares: ordinary shares
Yeah.
and preference.
Ordinary shares and preference shares.
Hmm. So both type of shares will have certain advantages and disadvantages, right?
Yes.
On which shares a rate of dividend is fixed?
Preference.
Preference, good. And when the company is in profitable stage, which shares are more good to buy?
Ordinary.
Ordinary shares, correct. So we have seen types of shares also. Then we understood share capital also. That capital which is raised by issuing shares is known as what? Share capital.
Share capital.
Now, types of share capital we were discussing.
Yeah.
Okay, so these are the types of share capital. Number one, we have already discussed authorized capital,
Wait,
right?
can you repeat that? Because I didn't write it down.
Yeah, no problem. Authorized capital is the maximum amount of capital. Maximum amount of capital which a company is allowed to raise from market
Okay.
by issuing shares. It is the limit actually,
Right.
right?
Yeah.
And this amount is actually mentioned in the capital clause of the memorandum of association. So whatever amount you think it is appropriate for your company, so that amount you
Okay.
need to write in that memorandum of association in the capital clause. So that is known as what? Authorized capital. Authorized means you are permitted to issue shares up to that amount. Let's say I decided $100,000. This is my authorized capital, right?
Mhm. Yeah.
And what is the authorized shares? 10,000 authorized. I decided that this $100,000 I will raise how? 10,000 shares, each of $10. Each of $100 actually. No, each of $10, right?
Yes.
So this is the authorized capital, and this 10,000 is known as what? Authorized shares. Got it?
So okay.
I
So
can
if
issue.
one
Hmm.
is $10, then you're only allowed to have 10,000 shares in total.
Yeah, 10,000 I can issue in the market. Suppose in the first year I issued 2,000. So now available shares, how many now?
8,000.
8,000. Suppose next year I issued 4,000. How much available now?
4,000.
Yes. But sometime I can cross this limit also. Maximum
Okay.
limit I decided 10,000 initially. But later on
Yeah.
I found that this 10,000 is not sufficient. I need to issue more shares.
Yeah.
Right. According to this, I can issue in the third year only 4,000, right? To reach the limit.
Yes.
But and then I found that it is not sufficient. I need to issue more.
Yeah.
So what I have to do, I have to change the memorandum of association, the capital clause. So first I need to bring changes there. After that, I can
Okay.
increase this limit. As of now, only how many shares I can issue? 10,000 maximum, not
10,000.
more than that. So it means before bringing changes in the memorandum of association, I can't increase the limit. Got it?
Yeah. Yes.
Okay. After this, we will discuss issued capital. Okay, write down the definition. Issued capital, actually, it is the amount of capital issued to the shareholders. I will explain you with an example. It is the amount of capital issued to the shareholders.
Yes.
Noted?
Yes.
Let's see, what is my authorized shares? 10,000, no?
Yes.
Each of $10, right?
Yep.
Yes or not? So my authorized capital is how much? $100,000.
Yes.
Till now, tell me this is understood or not?
Yes.
Yeah. Authorized share 10,000, each is of $10. So authorized capital is $100,000. Now out of this, in the first year, I offered 4,000 shares to the public. Each of $10. So how much it will be? 4,000 multiplied by 10. So
40,000.
this is called issued capital.
Okay.
Understood?
Yeah.
I offered these many shares to public.
Yeah.
Understood the meaning?
Okay. Okay, what if you offer like 4,000, but then like the actual amount that like is invested in is like say 3,000. So is the issued?
No, I'm coming to that point. I'm coming to that point. Good point. You made a good point. So that is known as what? Subscribed. Next is what? Subscribed. Subscribed capital.
Okay.
Okay. I offered how many shares?
4,000.
But it is not necessary now that everyone will, like, all my shares got sold in the market. Is it possible?
No.
Sometimes not possible, no?
Yeah.
Suppose out of 4,000, public purchase only how many shares?
3,500.
So that is known as subscribed capital. So in this case, my subscribed capital will be $35,000. Understood now?
So it's the like amount of shares bought by the shareholders.
Yes. Issued means how much I offered.
Yeah.
Okay. And subscribed means out of offered, how much public brought. If they brought everything, all the issued shares, then issued capital and subscribed capital will be same.
Okay.
But in this scenario, what happened? I issued 4,000, but they subscribed only 3,500 shares. So that will be known as what? Subscribed capital. Got it?
Yes.
So write down the definition. It is that part of issued capital which is actually subscribed by the public. Got it?
Yeah.
Okay, now, which is the next type?
Called up capital.
Now understand, if you buy one share, how much you have to pay?
10.
$10. Now what company did it? Company want public to pay in installment, not in entire $10 in one go.
Okay.
Just to make their investment more easy.
Yeah.
So how $10? See, company told that if you buy it one share, you have to pay 10. But you pay 10 in this manner. First you pay 3. After that you pay 4. Then you pay 3. Like this, 3 installment.
Yeah.
Now, don't you think it is more easy for the public to invest?
Yeah.
Only at the time of application, you have to pay only 3, not entire 10.
Yeah.
Got it? So in the first year, company asked only these 2 installment. Only these 2.
Right.
So see, public brought, now I'm talking about called up capital. So public purchased how many shares?
3,500. 0.
3,500 shares. And in the first year, company called out of 10 only how much?
3.
7.
Oh, 7, yeah.
3 plus 4, 7. First year, 2 installment company called. So what is the called up capital? Can you tell me now? This is called up
24,500.
Yes. They brought these many. So eventually they have to pay 35,000. But first year only you have to pay only how much?
24,500.
I hope understood this.
Yes.
Read out the definition.
Call-up capital is that part of the issued share capital for which the payment has been requested from shareholders.
Company has requested that you brought these many shares. So first year
Yeah.
you have to pay 2 installment, 3 plus 4, 7. So this much amount you have to pay, right?
Right.
Now, is it necessary that everyone will pay?
No.
Sometime what happened, people are not there in their place. They went for
Yeah.
vacation. Information came by letter.
Yeah.
So they missed that letter.
Yeah.
They missed the email. Suppose now see, out of 3,500, there is one person. One person name is X and he is having 100 shares. He paid a
Yeah.
first installment, $3 he already paid. That's why he is a shareholder, right?
Right.
Now notice came for the second installment to pay $4 for, but he missed that information. So he will not pay on 100 shares. He will not pay $4, right?
Yeah.
For the time being, isn't it?
Yes.
Now called up capital is this.
Yeah.
But that fellow didn't pay how much dollars?
400.
So remaining other people paid na.
Yeah. So
So
2410.
that is called up paid up capital. Understood now?
Okay.
And the person who didn't pay, that money is known as calls in arrear. Calls in arrear, pending money. I
Okay.
hope clear?
Yeah.
And it is known as paid up capital. There is a chance that some people miss that information. So they will not pay. Rest all other shareholders will pay. Clear?
Yeah. Yep.
So read out the definition.
The part of the called up share capital for which the company has received payment from shareholders.